Welcome to the Passive Income Podcast. I am your host, Dividend Dave. Please be sure to join the Passive Income Posse by clicking that subscribe button below. And on this episode, very excited to have, him on Twitter as at Investment Cage. I'm going to throw it over to you to give yourself an introduction.
So I'm Investment Kage or Investment Cage. Either one's fine. Basically, I'm 24 years old. My bad. A lot of people started calling me Cage because Dividend Dandy, I've joined one of his things like, "What's up, Cage?" And I was like, "Who's he talking to?" And I was like, "Oh, yeah, my name spells Cage." But I basically got it from like an anime called Naruto. Like Kage is it's like a leader of like a village, and that's
Okay.
why I made that name. But I like Cage too. I thought it has like a nice ring to it. And
Yeah,
so
it does. I like it.
yeah, like I accidental. I just did it because I really like anime. Like I have a Naruto poster in my background. So
Okay, cool.
yeah. But yeah, I've been investing for about 3.5 years now, and yeah, that's really about it. I find investing really fascinating, and I like building the Twitter and just teaching people about like Roth IRAs and stuff like that. I
Yeah,
purposely try to sometimes make not clickbaity tweets, but kind of clickbaity ish, because I found those get a lot more views and traction, and then more
for
people
sure.
ask me about like what investing is, and I think that's what I really want to do is try to get like the newer people to like that have no idea where to start and it's cool to see like DMs like, oh hey look I did this. I'm like, oh nice, I love it. Like
Yeah, and
one
people
dude just
your
told me.
age, right? Like trying to get more younger people to say, "Hey, listen, if you start investing now, you don't have to end up like Dividend Dave trying to slug it out for another 10 years or 20 years at his age, right?"
I mean, even if you're older and you're investing, it's not like it's a
Yeah,
bad thing or anything. It's just a different path. And
exactly.
I was
But we all
lucky.
know the younger you start, the better you can be in the long run.
Oh yeah, of course. But I've also met people who started investing in their 50s and became deca millionaires in their 60s. So
Right.
I guess it all just depends on like your path. I think everyone has a path for a reason.
Yeah, exactly. No, I agree. I agree 110%. Before we get into it, I do have to give a shout out to buy investing shirts. You can use the code word posse in the link in the description below. There also is the very cool passive income posse t-shirt. So yeah, definitely use the link in the description and check out all the very cool t-shirts that they have over there. And yeah, with that said, let's just get right into it. You are in the US, in Colorado. Beautiful state.
Yes.
Actually, Colorado's on my bucket list. I'm actually, even for my age, I'm a pretty good snowboarder. So Colorado has been on my bucket list for a long time. Never been there, but would love to go snowboarding at some of the great. Obviously, there's incredible mountains in Colorado, and yeah, Colorado's definitely high on my bucket list.
Yeah, Vail's a pretty popular place. Super expensive, but it's very popular with
Yeah,
snowboarding.
yeah, Vail,
Skiing.
Aspen, Copper Mountain. I'm sure the list goes on for resorts and other places to ski and snowboard throughout the state of Colorado.
Hmm. Yeah, no, I actually have a friend who snowboards for the USA team. So
Nice, nice.
yeah, Chase Backwell. I never pronounce his last name right, but I went to high school with him. And one day he like didn't come to high school for like 2 months. And I messaged him. I was like, "Where are you, dude?" He's like, "Oh, dude, I'm snowboarding." Like,
Yeah, he's like,
I was
I'm
like,
in Tokyo. I'm at the Winter Olympics or something,
yeah,
right?
I was just like, "Oh, I didn't know you were actually like really good at that." Okay,
I
cool.
didn't know you were that good. Yeah,
Yeah,
cool.
like he showed like videos, and I don't really do it a whole lot, so it was just kind of fun.
Nice, nice. So yeah, let's just get into talking about some different companies in different sectors. And I guess first, obviously you're very young. You're in it at a great age. What what company or what sector kind of has piqued your interest the most so far?
So I really just like, I mean, it's gonna sound really broad, but I just like buying monopolistic companies that have really big moats. Like that's my big thing.
Hey, boring investing is
Mhm.
incredible investing, right? That's what we've all
Like,
learned. Just make
if
it
I look
boring,
at
make it simple, and let the dividends roll in or whatever it
uh,
may be.
so one thing about my spreadsheet is sometimes things don't auto-populate because I have too many things, so it kinda has some errors, so I can't tell you the industries on the top of my head. But, like, my biggest positions, like, for individual stocks are Microsoft, Apple, ExxonMobil is a pretty big position of mine, but that's only because I bought it during COVID, during, like, the $35 bottom.
Right?
Uh, I really like Kroger, uh, so I like consumer staples, and I would
Yep.
argue, like, Apple and Microsoft, like, a lot of people say they're consumer discretionary, but I would argue that they're consumer staples and, like, they're needed because, I mean, how many
In this
people
day
can
and age, yeah, they are, right?
yeah, like, how many people can go without their phone or out the internet for an
A day.
hour or a
Yeah,
day?
now,
Yeah,
yeah.
like, even an hour, like, I mean, you can, it's just not it's not easy, it's just, like, the
Sure,
world
yeah.
kind of
Maybe
revolves
you
around
maybe you go camping in the summer and you unplug yourself for a 3-day weekend or something, but for the most part, yeah, I use Microsoft all the time. I use Excel at work all day, every day, right? I use Excel here at home to track my dividends. I use dividends. Yeah,
Yeah,
so like definitely Microsoft for me is higher on the list than Apple, but that's only because I'm a Samsung user, but I definitely do understand the Apple, I don't wanna say argument, but Apple people. Like,
yeah,
you have your iPhones, you have your iPads, iPods, your, what are those earbuds called that are the
AirPods,
AirPods, and
yeah, like the
obviously
Apple Watch,
iMacs,
like, I
and
have one.
yeah, the Apple Watch, and, they've created this absolutely incredible ecosystem of products that are all integrated with each other, and
Mhm.
I agree with you 100%. Like, are they beyond just a technology stock to the point where they are now consumer discretionary? Like, they're not consumer staples. They're not Walmart and Costco. You don't Walmart and Costco, you have to go and buy
Yeah,
your groceries every week and you have to eat every single day. But you're right, we use the internet every day. All of us do, right?
mhm. Yeah, that's why, like, you could argue that they're kind of in that, like, discretionary, but, like, kind of like, the Apple Watch, I mean, it's kinda cool, but I could really live without it. Like, there's
Yeah.
been days where I completely forget to wear it, and I'm just like, "Oh, I forgot to wear it." Because, like, I just got it because it counts my steps. A lot of people like it because it has, like, your VO2 max, but, like, there's other watches that do that. I'm kind of a fitness nut. Like, my profile picture is me flipping, so
Yeah, I saw that. I thought that was very cool.
yeah, so, like, I'm kind of like a health nut in that aspect. And but yeah, no, like the Apple Watch, some people are really obsessed with it, but like I don't know. I got it for free from my grandfather, so that's why, because it was his old
Nice.
one.
This is a
Otherwise, I
very
wouldn't
hip
have it.
granddad giving you an Apple Watch.
Oh, he's an electrical engineer. Like he was an electrical engineer for like the Navy, and he worked on like submarines and stuff and the internet with I don't know exactly, but like I know he helped a lot with that stuff, and
Cool.
so did his brother. So, but yeah, no, he knows more about technology than me. He's like in his 80s, I think. Think he's like turning 82 or 80. I
Wow.
can't remember the top of my head. But yeah,
I'd
no,
like to have a conversation with him.
yeah, he's very tech savvy.
Cool, cool. That's a very interesting point and perspective, though, that you bring up that, to the point that Apple and Microsoft have just worked themselves into our daily lives to the point where we rely on them, not just to the point where, hey, we like them. Like you said, you could live without your Apple Watch, but could you live without your iPhone and all the other or whether whatever, right? Like we now rely on technology.
Yeah, like my boss like texted me this not texted me slacked or whatever this morning. If we didn't have a phone, how would he be contacting me? Like maybe email, but people don't check their email all the time, right? If they don't have their phone, like they have
Right.
to actually they'd have to actually get on a computer. So like I can just instantly tell them like, oh no, I can't do that, or oh yeah, I can.
Yeah, yeah.
So like it's it's pretty important. Like it's really hard to even get a job without a phone now.
Oh
Or it can be
yeah, like
done, but
how well,
a lot of
even back
jobs like
before cell phones, you had to have a phone number on your resume to get a job. Now, back in
Mm-hmm.
the day, those were landlines, but still, it was like, oh, huh, that person isn't, that landline is attached to the wall in your kitchen. And, I'm out driving my car. So my mom takes a message and I call them back. But yeah, you still had to have a phone number on your resume. And now
Mm-hmm.
it's much easier now. You just put a cell phone number and they, either call you or text you and you just text back saying, I'll be there in 10 minutes, right? Like text. I love texting. Texting is fantastic because, well, one, I don't
Mm-hmm.
have to talk to people on the phone anymore. And I can just text and say, hey, I'll be there in 10 minutes or or I'll be there whenever, or whatever the text might be, right?
Yeah. No, that's a really nice thing. I didn't get the consumer discretionary or staples thing until like Gen X Dividend Investor. I don't know if you follow him on YouTube, but he was talking about Apple and Microsoft, and that this was like a few weeks ago, and I was like, oh my God, they totally are. So
Yeah.
I'm not saying I brought it up, like I totally got it from him. So
Okay, cool, cool. Yeah,
yeah.
I've had a few of those things on Twitter too, where it's like I keep saying turn the cash register around on Twitter, and people are giving me credit for that, and I'm like, no, 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 I've heard that. I heard that from someone else. I can't remember who I heard it from. I'd love to give them credit, but
Mhm.
okay. And people have literally said you were the first I heard it from, so I'm giving you credit. I'm like, that's not the way it works. We should be giving credit to the person that actually said it first.
Yeah, and I know a lot of people too. Like if you like me, like if I say something and someone like copy and paste my tweet and they go viral or whatever, cool. Like they got
Yeah.
the information. Even if they didn't include me, it's still like I'm kind of included, if that makes
Yeah,
sense. It's
it
like,
feels
oh,
good, right? It feels
cool.
good
Yeah,
to
like,
have.
hey, look, I'm still helping, even though it's really indirect, because eventually it will come back to you because they're not going to have all the answers all the time, right? And
Right.
they're not going to, yeah, like people are going to eventually see it's fake and they're going to see where it originally came from. I mean, Mr. Beast did a segment about that where he loves it when people steal his TikTok videos. I mean, he doesn't love it, but like he's fine with it
Yeah.
because it just gives him free publicity. Because people are like, oh, who's this guy? Oh, who's this guy? And then more people follow him because they find the original person. So I view it like it's not necessarily a terrible thing because, and like the worst case scenario, if they're making money on it, it's really easy to be like, no, this is copyright. So
Yeah.
especially with today, especially if you're in the bigger space, but like if you're smaller like us, then that's probably a little harder.
Yeah, yeah, yeah. No. I'm a few subscribers away from catching Mr. Beast.
Yeah.
As most people on YouTube are, right? There's only a few of them. I think what, four channels that have more subscribers than Mr. Beast, maybe only 3.
Oh, I have no idea. I just remember following him a long time ago. Like I thought it was just like hilarious that he
Yeah,
did.
back when he was smashing laptops in his driveway or something. Or
Yeah,
counting to
no, like I remember him
100,000
like
for no
having like
reason.
a pager poster. Yeah. Yeah, no,
Cool.
he's a really smart guy with that kind of thing. So I listen to a lot of his stuff that he talks about with that aspects because I used to be like, oh, someone copy and pasted the thing or whatever. And then I
Very
was like, oh wait,
interesting
no, actually
perspective as well because you're the same age as him, if I'm not mistaken. You're both around 24 years old, correct?
yeah, no, yeah. And he's
Yeah, so that's
actually
actually
super
very
great.
interesting too. I find him very
Yeah.
interesting and inspirational as well, even though like I'm twice his age, twice your age, and I
Hmm.
I love watching his videos to, you know, s- obviously they're entertaining videos, but also I love watching a lot of the interviews he does with different
Hmm.
types of, you know, on different podcasts and whatever, because he's just what he says and tells people, and it's like just keep grinding, just keep grinding, just keep grinding, and that's really what dividend investing really is too. You want to start,
Hmm.
just get started. My Moneyball reference again, just get on base, just get started, and watch that snowball, right? And just keep grinding every month, every quarter. Just keep adding to it. Just keep adding to it.
Yeah, I mean that's kind of like Gary V. Like he
Yeah.
kind of helped push me to like make a Twitter, right? First it was Dividend Growth Investor because I saw him on Instagram all the time, and I was like, "What's this Twitter thing?" Like I knew about Twitter, but I was like, "Fine, I'll make a Twitter."
Yeah.
And then Gary Vee was like, you should make content for like 3 years, and if it gets no views or likes after 3 years, then he's like, okay, you're doing something wrong, because it shouldn't take you longer than 3 years. Because if it's taking you that long, you need to give up, rebrand or whatever. And
Yeah.
so like I took that to real heart, and for like 8 months on Twitter, like nothing. Like I had like 37 followers or whatever. I was like, why is no one looking at my stuff? And so I started looking more into it. It's like, oh, I'm just tweeting randomly. I'm not commenting to anyone. I'm not liking anything. Like there's no way anyone's gonna find me. I don't tell any, like my friends and family didn't know about the account. So there was no like external growth. It was all internal. So but like I feel like yeah, you should just keep grinding and like find the things that work for you and like your niches. Like I found I'm really good at finding trends before they happen, about a week
Oh,
before. Um,
definitely
like with
keep
like
DMing
politics,
me every time there's a trend that comes up. That's like,
yeah,
what's
like with
the? How
politics
can we
and
make
like
money on the next trend that's coming next week?
well, I'm not very good at with like stock picking. Like it's like global things. Like I'll see
Right.
things like I mean I remember tweeting about like when they had the stimulus checks, and at that time I was researching a lot about how money worked in like fiat currencies, and so I just happened to see this, and I was like, wait, we're getting $600 stimulus checks. I was like, that's you're just printing more money. It's going to cause inflation. I
Yep.
remember tweeting about that, and people thought I was an idiot. It was
Yeah.
insane. And I was
And
like, but this is how it works. And I gave examples of like Rome doing it and like Greece and Germany,
yep.
like having like
Every
those things.
time it's like history is just repeating itself right now, basically,
Yeah.
right?
I was just like, it has to. Like, there's no way this time is different. Like,
Yeah.
but people thought I was crazy and insane. And yeah, no, I just thought it was pretty funny. So, like, there's certain things where if you can find that you're really good at, it's great. And I think too, with like the dividend investing, since there was a bear market last year and maybe this year, we don't know. Like,
Right.
we don't
Agreed.
know what's going on, right? We have no idea. But I saw a lot of people on Twitter like stop tweeting about finance stuff and just investing. I was like, ooh, this is my time. Like I really need to start talking more about it, because now it's not over flooded. There's not 100,000 people talking about how they made 10x their money and 10x their money there or whatever. So I just found that niche and was like, okay, I'm just gonna do this. And so far it's working pretty well and I'm liking it. So
Nice. Good stuff. Let's get into talking about some of the different companies and different sectors. REITs are probably my one of my most favorite sectors, top two
mm-hmm.
for sure. And every single American guest I've had on, everybody knows I'm Canadian, and every single American guest that I've had on the Passive Income podcast, save one, there's one person that did not own Realty Income O, but
I don't.
you do own or don't?
I do not. I
You
don't
do
own any
not. So you're
REITs.
number two. You're the second person, the second American that does not hold. For the longest time there, we were at 100%. Every single American guest coming on here would say, "Yeah, I own Realty Income. Great company." So I guess just what's your logic for not owning it, and is it on your watch list? Would you own it in the future?
It so it depends. So like I don't like REITs very much. Like
Okay,
just
fair
how
enough.
they're structured, to be honest. Like they caused the 2008 recession. So like I'm very like the reason why like there's a lot of laws. So with REITs, in order to buy new real estate, because they pay out 90% of their dividend, right?
Yeah,
And so in order to buy new real estate, they have to do share dilution to fund their new purchases. And when you're doing share dilution, as you know, like you're making your shares worth less as the shareholders. And I think Realty Income does that extremely aggressively. And a lot of people disagree with this, but this is just my opinion.
yep.
Like they just
Not financial advice, just two guys
yeah,
talking.
yeah, this is just I found that like they just do it really extreme, and they don't really do a lot of share buybacks as much as like I would like them to. Because usually if you do share dilution, you want to buy back some of their shares, even though they don't have a lot of cash. But they're trying to go super aggressive and buy as many properties as possible, which is fine. But that means they have a lot of debt, and
Right.
potentially. I haven't looked in the balance sheet, but just looking at like the trends of dilution. Well, there's companies like Vici, sure they do share dilution, but they're only buying companies like they own like almost all of Vegas. They just bought some Canadian properties, I believe, but it's all like casinos and stuff that's like, even in a recession, people are still going to do. And they still do share buybacks. And so sometimes their share dilution, it's not as heavy as like realty income.
Right.
I also don't like the taxes on REITs. Now, if you have them in like a retirement account, like a Roth, sure, they can be great. Like my grandfather, he was telling me about he owns a REIT, and he's like, oh yeah, it's worth way less than when I bought it, but it pays like a 9% dividend or something ridiculous about that. And he's like, it's like more than triple its money just in dividends in the last like 7 or 8 years or something like
Yeah,
that.
it's tough to sell when the dividend just keeps rolling in every month or every quarter, right? It's like
Yeah.
you
And
don't
he's at
care if it
the age
trades
where,
sideways for 10 years because that dividend just keeps coming in, right? And
yeah, and
that's what we want. We want to just show me the money. Keep that money rolling in every month, every quarter.
hmm and because I'm younger, I decided that my investment strategy, like I don't need to go towards REITs very much. Like my dividend yield is I think 1.63%. Like it's extremely low.
Right. Yeah, wow, that is low.
Um, yeah, and so it takes me a long time to like make my dividend income increase. But like I'm only 24, and if I really need, yeah, so right now it's 1.65%, but my yield on cost is 2.28%. So
And
I
you
think
have
that's
time
good.
for a lot of that to become dividend growth, right?
Mhm.
Like,
Yeah, and the
10 years,
main
20 years down the road.
exactly, and the main reason why I was like okay with that because I looked at companies like Visa, which I own a little bit of Visa, but they have like if you look at their dividend in I believe 10 years ago to today, it's like the yield on cost is like 50 some percent, and I was like, oh, I plan to be financially independent by like 35. I could have an insanely high yield on cost on this company if
Right.
obviously they continue that growth. It's not guaranteed, but it's like, oh, okay. So like that's what really solidified my dividend investing like strategy is because of yield on cost. And like you see like Warren Buffett, like he makes back all of his money every 2 years in Coca-Cola. Like doesn't reinvest it, but then he just puts it in different companies. And I'm like, oh, that's the really powerful number that I really want to. The dividend yield to me doesn't matter as much. Now, if I was in my 50s, sure, I'd be buying more like things like SEHD, probably Realty Income or Vici, just because I would need that income faster. But
Right.
I'm in a great situation where even if I don't retire financially by 35, I'll still be in a great place. And
Yeah.
if I wanted to, I could always just sell companies and do things like the dividend dream. I think that's what she's doing with a lot of her stuff because she wants to get that 100K income. I don't
Yeah.
know for sure. I'm not trying to speak for her or anything like that, but that's just what I've seen with her channel. It's like, oh, she's trading her position, so they're higher income. And then you look at people like Gen X dividend investor. Uh, a lot of his holdings are like Microsoft and Apple are like his biggest holdings. And so, but he doesn't need the income right away, so he's okay with a lower yield. That's kind of the position I'm in.
Yeah. Fair enough. Good points. Yeah, interesting. Uh, banks and financial sector. So this is interesting. I'm sure you're well aware of how strong the Canadian banks are, and then
Oh
in the
yeah.
US you have some very good banks as well to invest in. I don't know what they're like as a consumer, but obviously you have your Wells Fargo and JP Morgan and Bank of America and so on. Thoughts on banking and financials?
So there's a bank I'm really looking at. So I'm sure you've all heard of it because like Graham Stephan always talked about it, Ally Financials. And if you look at it, a lot of their so Ally is really cool. It spun off from GM, like it used to be GM's bank. Like GM is our car company, right?
Yeah, General Motors.
Yeah, General Motors. I believe so. I could be wrong, but I'm pretty sure it was GM's bank, and it got spun off and it became its own bank. And so they mostly deal with car loans. And
Right.
now cars, this is like a thing that I've seen with trends, right? Used car prices were absurd last year, right? You could buy a used car for more expensive than a new car. Now you're starting to see people default on their loans,
Yep.
and because they're not because basically what's happened in the car market is what happened in the housing market in '08. they pretty much just approved you for anything you wanted. Like, ooh, you bring in $1,400 this month, sweet, you can have this car payment, or you bring in, yeah. And so they're just approving everyone left and right, not caring, no care in the world. So I feel like a lot of cars are gonna be defaulted, and you see in the used car market right now, anyways, like used cars sales, they just can't sell their cars because it's like, well, I bought this car for 20K, now it's worth 16K, but I've already put $1,000 into it, so I have to sell it for at least 21K, and so it's just sitting on the lot, just keeps
Right.
depreciating more and more. So you're going to see a lot of used car sales businesses go out of business. And Ally, since they support a lot of those car loans, I feel like they're going to start going more down. I don't know for sure because it's not their only sector, but it's like half of their revenue basically comes from used cars or just cars in general. So it's like, well, that stock might go down, and it pays a really nice dividend too, and it's a growing dividend, I believe. So I've been looking at that bank a lot.
So are you looking at that to like buy low, like
hmm
the the
I
the
think even
stock
right now it's
share price
still
goes down?
yeah, I think right now it's still like trading at relatively fair value. Warren Buffett actually owns the stock too. Uh, so just, I mean, obviously, Warren Buffett also owns Kraft, and we know how bad Kraft is done. So, like, just because Warren Buffett buys it doesn't mean it's going to be a great stock. Uh,
Right. No,
but
that's interesting. So, but if you're thinking that stock's going to go down and all these, because I agree with you 100% about, used cars. Inflation has obviously gone crazy, and
hmm
people are paying more for everything, paying more for rent, paying more. You know, mortgages are higher because interest rates have gone up. Everything in the grocery store costs more, and the number one thing that starts to default first is that car payment. That's like pretty much proven. It's like we got to have a roof over our heads, and food on the table. And if push comes to shove, I can use public transportation, or
yeah, it's
walk,
inconvenient,
or
but you
ride a
can do it.
bike, or whatever else, right? So that car payment is kind of you know bringing up the rear in the uh like the hierarchy of what you need most. So I guess my question or my thought is, if you're thinking that stock price is going to drop and all these car loans are being defaulted, isn't there a risk of that dividend being cut as well?
So there is a risk of it, of course, but if you look at it, like even though they had so like their earnings were, I believe, worse than like expected, but they re-changed it because like companies can re-change their earnings and be like, ooh, I think it's actually going this direction like a week before, and so it
Yeah,
doesn't look as bad. And people don't realize that a lot of companies do that all the time. And
yeah,
they'll change it like a week before, and then they have their earnings call like, ooh, look, see, like we're okay, guys, and
yeah,
you it's you have to look really in depth. So I like to look at older earnings calls and like reports. That way you get a better idea because companies lie. They try
yeah.
to manipulate the data.
I don't want to call it cooking the books, but it's a little bit cooking the books, right? Like just a little tiny
Oh
bit of cooking the books.
yeah, yeah. It's like yeah, it pretty much is. It's just like they're not being transparent completely, and so that's usually I don't like investing in companies like that in general. In fact, the Allies kind of done that. It makes me a little hesitant to
Right,
buy because then it's like, well, if you're gonna lie about that, well, not lie, but like if you're gonna do that, then are you gonna be with my morals?
right,
But like overall, I think it's a great company. Like they do a lot of other loans and stuff, and they're trying to spread out. And even with like if all their car loans defaulted, they would still be a profitable company. It
oh,
was
okay,
like
well, yeah, that's
I can't
obviously a good
remember.
thing.
Yeah, so what I think is going to happen, like they'll see the earnings call and the average retail investors will freak out. They're like, "Oh my gosh, like look at this! Like our revenue is so much worse." And I mean, you see that with REITs, for example. Right as a REIT says they're gonna do share dilution or buy a company or buy a bunch of buildings, which is share dilution, it trades down like 3 or 4%. Like Vici is very historical of that. Realty Income, it's extremely predictable. Uh, it doesn't happen all the time, but it happens a lot.
Right,
It's kind of like the same thing where you can there might be some potential with some swing traders and I actually learned that from like my 3X, and someone commented about that on their Discord, and I looked more into it. I was like, oh, that's weird, like all those points. So, but yeah, for
Interesting.
other banks, so I actually own another bank, but Ally was the bank I was looking at. Bank of America is a. Sorry, I have really bad allergies, so I'm sniffling a lot.
Yeah, no
Uh,
worries.
Bank of America, it was one of the first like individual stocks I bought. And I'll be honest with you, I don't know a ton about the company. I just know that a lot of people like them. Same with like JP Morgan.
Yeah,
But
I see
like,
a lot of tweets. I don't invest in the U.S. market as of right now, and the only reason, the
mhm.
two biggest reasons, are the exchange rate. I would just get killed on buying in U.S. dollars right now,
Oh
and
yeah.
then also just I don't need to deal with the headache of the taxes back and forth. And I know there are tax advantages in certain accounts, whether you're a Canadian investing in the US or an American investing in Canada. But I just don't need to deal with that. But pretty much the number one reason is right now the Canadian dollar is way too low for me to be looking at US companies. But I do see a lot of tweets about Bank of America, and it does seem like an extremely strong company to invest in.
Yeah. No, yeah. So like I'll be honest with you, it's kind of like a bit of a gamble. I've held it for so long and the position's doing okay. So
Keep
like
holding
it,
it. Why not,
yeah,
right? Keep
and it
holding
pays a
it, let
pretty
that dividend roll in every quarter
yeah.
and just say, thank you for paying me to not work for you," right?
Yeah, I also own JP Morgan. Now, people don't realize that JP Morgan, they're extremely volatile. So, if you don't like volatility, that's a bank I would probably stay away from because one earnings report, it might be at $90 a share, and then 6 months later, it might be at $140 a share. And
Right.
so, like, if you can't stomach like big fluctuations and drops, which when I first started investing, I was like that. That's why, like, the first individual stock I bought was Coke.
Oh,
Because
cool.
I was like, because I looked at it and I was like, oh, even recessions it doesn't drop, and then COVID happened and it dropped. The one recession where it drops, right? Um, but
Well,
yeah, that
COVID, that March 2020, that was such like a little mini.
I
It
know,
wouldn't,
yeah,
not even a recession. That was just like a blip because nobody knew what was happening
hmm
for a few days in the middle of March of 2020, and all the stock, like the price of every company just plummeted, and it was a
hmm
great time to like great entry points because all of a sudden, like by April and May of 2020 and June and July of 2020, all those stocks had gone right back up. So
yeah.
great entry point if you happen to time the market in March of 2020.
And that's one of my like biggest regrets because I didn't work a lot at that time, and I only invested like 150, $300 a month at the time, and so I saw it.
Which
I
is
saw like
amazing for your age, to be
yeah,
honest, right?
but like I saw ExxonMobil like tank, and I was like, the world runs on oil. Like I
Yeah,
remember seeing a tweet like when I first started Twitter about like how everything uses oil, and I was
sure.
like, and like when I saw ExxonMobil like drop in like Chevron, I was like, I just literally flipped a coin of which one I would buy because like I was like, there's no way this company is worth this little. Like it was trading like below like book value. So I just flipped a coin which one I bought, and I don't remember which one it was for like heads or tails, but I
Yeah,
was like, oh, okay, ExxonMobil, buy.
good. Well,
And
and to that point, everything runs on oil. What I find really interesting is how much oil and gas is used in mining lithium for lithium batteries in electric cars.
mhm,
I don't know if it's ironic the right word? I
I
guess
guess
maybe.
so, but like it's also like it's like it loses a little, but in the long run it gains. So like sure, you need to use this resource to get this material, but after 10 years of using the battery, is it better than the oil that was
Right.
used?
Yeah, no.
So there's
Valid
like,
point, valid point. I just think it's again, I don't want to use the word hilarious, but I do find it and I guess maybe the right word is ironic just how much oil and gas is burned for mining, well, both the lithium and the copper that go into electric vehicles, right? Is like, are
yeah,
they really that much more like green technology? I guess.
Yeah.
But like you said, in the
Especially.
long run, they probably are after 10 years. But
Hmm.
it's just, I don't know. To me, it seems like there's a lot of there's greenwashing going on there. And sorry, I'm
Yeah.
getting a little off topic there, but
Oh, no worries. I think it's a step in the right direction, but yeah, no,
I
like I
agree
think
with you.
that's
It is a
important
step in the right
because
direction. But wow,
so I own a company that I got for free with referring a friend.
oh nice,
It's called Trox, like Trox. Um, it's a mining company, and so when I got it for free, I decided to learn a lot about mining
yeah,
because, and it pays a dividend. That's the only reason I kept it.
perfect.
I didn't read the financials of it. I just thought it was fun, and I just tell people like, "Look, I get this dividend that I referred from a friend, and
Yeah,
it's truly
again,
passive
they're
income."
they're paying me to not work for them, and I didn't even pay to invest in their company, and this is like
Yeah,
double win, right?
exactly. And so, but I decided to learn a lot more about the mining process because it was just kind of curious. And like copper, apparently, it's like really hard to extract to like make it usable like efficiently. And
Right.
it takes a lot of chemicals and things like that. So that's why like electric, I think is like electric batteries. It's a step in the right direction, especially in like buying for Teslas and things like that. But obviously, there's going to be some growing pains. Like we've lived off of oil for the last 120-ish years, right? Like
At
pretty much
least, yeah.
everything we've used. There's actually a really cool documentary from Modern Marvels. It's free on YouTube. It's on the History Channel, and it's all about oil. And basically, we had this resource, and we couldn't use a ton of oil. And so a bunch of scientists and people were like, "How can we use all this leftover stuff so it's just not wasted?" Because we use it for our cars and heat. And they're like, "Ooh, we can use it for plastics. We can use it for our screens. We can use it for glass. We can use it for
Almost every
tires. We can use it for asphalt because what they did is like the oil drills. Basically, they would have this like gunk, and they couldn't use that gunk, and they just have to like, and it wasn't very easy to dispose of. And then someone figured out, ooh, look, I can make asphalt with it. So we just kind of went on to like just depend more and more on it as we just found more resources. And I feel like
right. Well, we found more things we could do with it. And all of a sudden, it's like,
Mhm.
oh, you can use, this.
Yeah, we don't need rubber trees anymore.
Yeah, we can use this for almost everything. And we
Hmm.
like, petroleum based products are, well,
Yeah.
leaves me speechless to even try to think about it, right?
Yeah, that's really why I bought like ExxonMobil because I know humans are very hard and it takes a long time to transition, especially with how big we are now. So I'm like, well, I think it will be a good company that I'll hold for about probably 50 years. Like, I think we'll still use some kind of oil in 50 years. Now, I could be completely wrong, obviously, but that's just what my gut tells me.
Yeah, I'm guessing we'll still be using oil and gas 50 years from now.
Hmm. I mean, it might not be as much, but
Yeah, maybe not, but probably still some in use, right? So,
hmm especially if we can get recycling down better. Which is why some people like companies like Waste Management because it's a very predictable business. It's super boring. They take your trash. They slowly increase the prices every year. They give you the dividend. They split the difference a little bit, kind of like Pepsi.
yeah.
It's a very reliable, predictable company.
And yeah, you gotta love that dividend growth, right? Every
Hmm.
year just becoming dividend aristocrats, or I think they're both dividend kings. Or I saw
I
one chart that
know
showed
Coke
Pepsi
is.
at
I don't
49
know.
years.
Yeah, Pepsi's really close.
Yeah,
I think Pepsi has slightly more potential for growth than Coke, though. Uh, kind of like the I could play devil's advocate of it, but the only reason why is I think they sell food
yeah,
and
the
their
snacks,
snacks and stuff.
the
And if you look
chips and
at
whatnot.
the market cap of them, Coke has like I think $100 billion more market cap or something like that than Pepsi. It changes every day, but
Sure.
it's in the tens of billions at least. And so I'm like, oh, Pepsi has some good growth, but also uh, if you travel the world, like when I was a kid at least, like my parents and everyone I knew was like, you always drink Coke because you know that will be safe. You know, Coke, no matter what, will be safe because they have such high standards of their drinks, and no one says that about Pepsi. Now, I'm sure Pepsi would be safe, but everyone just said, like, Coke is just like a bigger name. So I
Yeah,
think if Pepsi can figure out maybe with their food industry, maybe make more money, but also working at a liquor store. So like we have a contract with Pepsi. It's my parents' liquor store. I found like shipping. This might just be our store, so it's a really small sample size. But there's always product that's just like opened or that we can't sell because it's exploded, or like the bags of chips are just like everywhere, and like they just put in random boxes. They don't put like any foam or like protective stuff for the goods, basically. And
Yeah, that
so
definitely sounds like a quality control, quality assurance issue that
yeah, exactly. Now they give you all the money back, and they just credit you or whatever, and so it's fine. But I feel like if a lot of companies are like, if they're doing that, like how much money are they losing? Like, could they potentially make more money if they got better at packaging?
put some
Uh,
foam peanuts in there and so the
yeah, but
things
that might
aren't
cost them more, right? Like I don't know
right.
fully. I don't. Maybe that's they've already weighed out that cost, but I feel
Cost
like
analysis.
Pepsi might, because they're spread out too far, since they have drinks and they have their food and they have so other many. Like Coke is just drinks,
More or
and so
less, yep.
like, they might be spread out too thin, basically, and like the CEO might not be able to focus, and like the board, they just they might not have the tools to do that. It's kind of like Standard Oil Co. Like when they split apart and to like ExxonMobil, BP Oil, all those companies, they're able to specialize, and it made the Rockefellers more powerful. But they're able to specialize in certain things, and so that's one worry I have about Pepsi, is that can they specialize in both of them? If they
Right.
can successfully, yes, I think that company could be a lot bigger than Coke just because they have more product. But Coke, they have Coke, and that's just what they do, just drinks. And but doing two things is a little hard. Like you can see that with like Amazon. Amazon has the same issue. Like AWS is by far the most profitable thing on Amazon. All their other things, not really. Like they're okay. Like a lot of them make some money, but it's like the same thing with like Microsoft. You don't hear people like talking about Bing growing 10% every year. You don't hear investors talking about them. Be like, oh, Bing grew 10%. Well, Google owns 93, 92% of the market of the internet.
Right.
So I'm just using a bunch of different things to compare, really.
Yeah, yeah, no, understandable. Let's
Mm-hmm.
jump into another sector, telecoms. What are your thoughts on AT&T, Verizon, T-Mobile, any other
So
telecoms in the US?
I got my mom to buy T-Mobile stock. I don't own T-Mobile stock, but
Oh, so you're like, I don't own it, but you should.
no, but like
And you're like,
I
not
own
financial advice,
T-Mobile.
mom, but buy T-Mobile.
Yeah, but like pretty much that was pretty much what happened, and it's doing really well. I just saw it dipped really low, and at the time I owned AT&T and Verizon. I don't anymore, and I was like, yeah, I really wish I bought T-Mobile instead because I think they're a better company. Uh, they really try to provide value to families. They don't try to price gouge you all the time. Like their customer service is just phenomenal. Like dealing with AT&T and Verizon, their customer service, just in my experience, was just not the greatest. It
Right.
got done, but it wasn't great. But like T-Mobile, I never had issues. Like I had to get a new phone, and like I was in Grand Junction, and I was like on my parents' plan, right? And or like I had to get a new SIM chart card or whatever. And it was really easy. I just went into the store, like, oh, okay, we'll just look up your account. What's your father's number? And I was like, blah blah blah. And they're like, okay, here you go. Oh, yep, it does. And then like, here's your driver's license, and it was super easy. I was like, whoa.
Yeah.
And like, I talked to
And
other
you're like,
friends,
that's
and
the way
they're
it
like,
should be. It should just be this easy, right? Like
yeah. And I
it's
talked to other friends who've done that with like other companies, and they're like, no, I have to do this and this, and sometimes I have to go to a different store. So like T-Mobile, I feel like just has it down. Uh, Now AT&T, I think the CEO, he just he buys businesses and then he sells them for less than what he bought them for. Like every 2 to 3 years. All the time. It's awful. It's terrible. And so like blind luck, Adam, he knows a lot more about the AT&T space than I do. But that's basically what he explained it like, and I was like, "Oh my god, you're right." Like, and they just sold their Direct TV thing or whatever their HBO, whatever their streaming service was, I can't remember,
right.
and they
Yep.
sold it off to I think Direct TV or whatever, and that's doing terrible. Like, so it's actually a good thing that they sold it off, but these companies just have so much debt, Now, a lot of people like AT&T too because the U.S. government's very reliant on AT&T. Um, and then I bought Verizon because I wanted them. I had no investment thesis on Verizon. I just broke even on them, and so I sold them because I was a newer investor, didn't really know what I was doing, so I sold them when I was like, okay, I don't really want to be in the telecom sector. I just don't know enough about it.
Yeah, fair enough. Fair points.
And I don't care to research about like every time I do research about it, like all the stuff I talked about, I was bored to death reading about it. I was like, I don't care because like seeing a company $100 billion in debt, just why would I want to try to touch that?
Yeah.
Like that
You're
was just
like,
my thought
wow, that
process.
sounds scary.
Yeah, I'm extremely anti-debt. Like I hate debt. I don't want to be in debt. I mean, of course, I might have like a mortgage or something like that
Sure.
eventually, but I would be I'd probably be like a more conservative Dave Ramsey kind of person. Like, yeah, I'm gonna pay down my mortgage pretty quickly. I might not. I'd probably still invest, but so seeing a company that doesn't have like the same morals as I do, with like the debt, that just terrifies me.
Right. Understand on 110% understandable.
Yeah, so that's telecom space is just not for me.
Fair enough. Fair enough. We did kind of touch on consumer staples and consumer discretionary earlier, but I wanted to circle back there, kind of get your thoughts on, and we've talked about obviously Coke and Pepsi as well, but
Hmm.
Walmart's, Costco's, and obviously those are the consumer staples. You have to go and get your groceries every
Yeah.
week, every 10 days, however long before between. If you have a whole lot of kids, you might have to go grocery shopping every 4 or 5 days, right? Um, and then kind of my point is I do tend to lump the consumer staples and discretionary together. And my point has always been it's like, okay, well, I have to go to Walmart or a grocery store to go grocery shopping, but I don't have to buy Coke or Pepsi when I'm in that store. So those are more the discretionary items. So I guess just what are your thoughts on that on that sector?
Uh, I really like it. I own a lot of Kroger stock, for example.
Right.
It's one of my favorite companies, like Dividend Dog. I know he owns it a lot. He was on the podcast. I watched that one.
Yeah.
Uh, yeah. He, him and I know own a lot of Kroger, and I bought Kroger originally because there was this. What's his name on YouTube? I can't remember. He was one of like the first dividend YouTubers that. Uh, Shoot. Anyways, but he talked about like Kroger, and I was like, oh, huh. I go like the Kroger's like literally a block away from my street. Like I walk across the
Right.
street and it's right there. I was like, maybe I should look into this company. And I kind of liked its financials. Its fair value was around I think 44 or 48 at the time when I bought them, and it was at like 32. And I was like, oh, hmm. And then like I saw like bigger investors like Warren Buffett and a few others that I can't remember on the top of my head. Like they owned it also, and I was like, okay, there might be something here. And I just kind of, and any Kroger I've gone into, I just really liked how they had their name brand stuff and they had the Kroger stuff, but they didn't
Right.
try to push the Kroger stuff on you like Walmart and not Target really, but Walmart really tries to push like great value, great value, great value. Well,
And
Kroger
same
is
with
like, hey,
Costco with the Kirkland products, right?
well, Kroger, I actually own Costco too. Uh, well, Kroger is just more like, hey, we have our stuff here. We want you to save money, but like we also know you like this stuff. So
Yeah.
we're gonna try to carry an equal amount of both, and we're really into like money conscientious and like trying to save people as much as can. They also do really cool things like when they open up a new store, they get they get like all their Kroger products within like 90 days or 120 days. That's their goal. They don't necessarily hit that every time, but and they try to still keep the place there. Like King Supers was originally that's what Colorado is, wasn't owned by Kroger and Kroger brought them. But they did a really
Okay.
good job about maintaining the culture and not changing it. Because that's a big thing. If you look at acquisitions of companies, like most of them fail because they try to change the culture right away.
Yeah.
You can't do that with a company. If it's already working, why would you change it? Now you can always improve upon it, but you can't just like go 180 and do a bunch of different things. So I think Kroger specifically does a great job with that when they buy companies. Yeah.
Interesting. Now, I do want to also just bring up your. So this is on Google Docs. You can
Yeah,
find
that's
this
the
link
free
through your
spreadsheet.
Twitter handle or through
Mm-hmm.
your Twitter page. And
Yeah,
yeah, let's just talk through this a little bit.
some of it might not be updated because I try to spend about 30 minutes a week on it. Uh, haven't been very good about that. uh, so if you hit read first, it basically just tells you to. It
Yeah,
just
that's the
has like
read
why I
first
made
page.
it. Do not request access. Do not request access. Do not. Yeah, it says that a bunch. Uh,
Right.
because every week I get like 5 requests or more about someone requesting access, and I was like, "Did you read the sheet, my guy?" But like also when I first like was doing the spreadsheets, I also requested
So right
access
out,
to them.
big shout out to Ryan Williams.
Yeah.
So
Oh yeah, no, like this is pretty much his spreadsheet. Like 90% of it is his spreadsheet. I'm not gonna even like say it's not or like take credit for it. Like most of his formulas, like he's an amazing dude. Uh,
yeah, no, I had a great conversation when he was a guest on Income Podcast a few weeks ago. Yeah, it
yeah,
was
and he just made like a version 6, and Gen X Dividend Investor made one too, and Dividendology is making a bunch of stuff. And I think I'm gonna buy their thing and get their spreadsheets, and then like approve upon this spreadsheet. Hopefully, that's the end goal.
right.
Now,
Cool. I'm just
is
kind of clicking over here on each of these tabs down below to
yeah.
read the
So
first
if you go to
dashboard
the
portfolio
dashboard,
summary.
uh, if you go to dashboard, there's a into the far right. There's a income, like yeah. So click that, and then go to the right, and this is what's really cool. It's up. It's on the top right. Sorry.
Okay, I'll find it.
All right. I just don't remember what it's called. Oh yeah. So it says your yearly income needed to retire. It's in blue or teal.
Oh yeah,
And what's fun about that is you can just type the number you need, and I put a formula so it auto populated the dividend. And it can tell you like the percentage of away. So like, let's say you made $82.19. You're 2.2% away. Like that's your daily, and that's your 9 to 5. So
right.
you're 2.28% way to like being able to retire. Chad, I don't know if you've had him on the pod. I don't think you've had him on the podcast yet,
No,
but Chad
not
Money
yet.
Matters. He was like, "Hey, is there a way to do this?" And I was like, "Yeah, I have it in my personal one." And he's like, "Can you add it in the free one, man?" And I was like, "Yeah, why can't I?" Like, it just never occurred to me to do it, right? Because my
Right,
personal
right.
spreadsheet
And
has a lot more stuff, but I think it's overwhelming to a lot of people. Uh, I like that one, the sheet you're on, the monthly dividend income. I originally
month.
put it on the monthly dividend income tab. So you're on the data, but you can go to monthly dividend income.
Oh, this one. Sorry. Yep.
Yeah, that this sheet auto populates and connects to the monthly data pat. Um, I found the
Oh,
monthly data one was a little overwhelming at times, like if you're trying to look at a bunch of things. And so I just put a separate tab that after you put your amount of dividends you've received in the monthly data tab, it auto populates into the monthly div income. I should
cool.
probably write directions about that. Now that I'm thinking about it, I just haven't. I should probably write that in like that column, like I or something.
Right.
What's
Interesting.
really
No, it
fun is
looks like a
playing
very
with
helpful.
the compound interest calculator that I made. It's pretty far. I think that's the coolest tool that I found. And basically, you can type in. I think this spreadsheet that I made auto populates your annual dividend, and then you can put the monthly data, and you can see how much like you'll make. But what you can also do is you can make a copy of it, and you can put individual stock, and you can put the dividend CAGR and just all those things. So let me see real quick. Let me go to mine. So like I have like my portfolio value. So like you could write the stock, and let's say you want to do Coke. You could put in the share price. You could put how much month you wanted to put in, or quarter or year, and then you can see like what it appreciates by, and then you can do your average, and then you can do the current dividend yield and the estimated dividend percentage increase, which is just the CAGR.
Nice.
And it just tells you how much you'll have every single month, assuming that growth stays. Obviously, it's not going to have the negative, like if a bear market happens or if it trades down, but it's just kind of cool. And then, like, what I found though is you can put your whole portfolio in it. So you can just put your portfolio amount, uh, the month you want to invest, the amount you think you'll appreciate, and then your dividend yield, and then your current percentage for increases, and it just auto populates it. So like my portfolio value is worth around 70-ish thousand, 72K. That includes my Roth IRA, right?
Yep.
And then on the far right, it has basically just like a column because it goes over 30 years of data. And so I made a thing where it just compiles all 30 years into 1 year at a time. And so you can see like how much you will of contributions you would have put in after year 1, 2, 3, and then what your cumulative dividends will be. So like if my dividend growth, and let's say I invest 2K a month at a 10% CAGR, which is really high. I know that's not realistic. But after year 10, I could have made 51K in dividends and be making around 9K a year in dividends. Now, will that probably happen? No, that's not super realistic. But like it's just fun to play with.
For
And
sure.
like,
Yeah, that's I think that spreadsheet is a great resource. Like you said, shout out to Ryan Williams for creating the majority of it. But I do like the
mhm.
tweaks that you've created on that spreadsheet as well. And you can find that spreadsheet
Yeah, on
uh,
my Twitter.
on your Twitter page.
Mhm.
That's how I found it.
Yeah, just the link. Like, I wanted to do a link tree originally, and then I was like, I've got a bunch of link trees. Who's gonna click a sec? Like, you have to click one link, and then you have to click another link. Like, no.
Oh, you millennials or Gen Z or
Um,
whatever you are. I don't
well,
want to click twice. Like
I
clicking
was
two
fine.
times, that's way too much work.
Yeah, no, but like I'm fine with clicking twice, but like I'm like this seems silly, right? Like I could just click it once. And
Yeah.
so basically what I did is I put it in my spreadsheet, and then I also have a budget sheet that I made. And so if you actually read it, and so the people who are requesting access I know don't read it, and so usually I email them back. I'm like, hey, by the way, if you look at the read this first tab, there's a budget sheet on the very bottom. And they're like, oh, I didn't read that tab. I'm like, I know you didn't read the tab because you
Yeah.
sent a request. I don't say that obviously, and like it's all in good fun because I remember doing the same thing. Like I requested access to someone, and the dude was like, "It says do not request." So I think it's funny that I'm like, "Oh, I was that person." So like I'm not even that. I just laugh every
Yeah.
time.
Well, and speaking
Uh,
of clicking things twice, click first the subscribe button and then click on the buy investing t-shirts to and use the code word posse for awesome dividend t-shirts. Yeah, I won't show you that one again. And yeah, you've seen the this on the screen a few times as well. You can buy me a coffee. So you might have to click more than twice, but you can do it. You can do it.
yeah, no, but like that
Yeah.
was just my thought process because I wanted to do a link tree, and then I saw you had to pay for it, and I was a little too extreme frugal for about 2.5 years. Like, I mean, extreme. I mean, I wouldn't go out or do really anything. Like, I'd go out with friends and stuff, but like, I wouldn't get a drink. I'd just get water instead.
Yeah, you'd be like,
Because, like,
no, I don't want to buy anything. I want that to go to. I want to invest that.
yeah, especially when I was like only investing like 150 a month, because I didn't understand to like you could make more money or you need to cut your bigger expenses down. I
Right.
didn't fully grasp that, and so like my thing is like the how I went from like how I started investing is basically I flipped golf clubs and like used sports equipment and I fixed it up, made it look better, and then sold it. That was when I was in Grand Junction when I went to school.
Yeah.
And so like I was like, okay, I'll just make a little extra money and invest it. And so instead of like trying to cut back on my expenses, I was just like, I'll just make a little more money. And I think that was healthy for me. But then I got to the point like, ooh, I can just cut back on things too and invest even more. Um, and so it
Yeah,
got a
those side
little,
hustles can be great. When I lived in Vancouver, I did very similar thing with snowboards and snowboarding equipment. It'd be like I would find stuff on say eBay or whatever, and then just sell it on say Craigslist or something local. I don't think
Mhm.
Facebook Marketplace was very big back then. Like we're going back over 10 years ago, so I don't think Facebook Marketplace was a thing then. But yeah, you could easily like buy stuff inexpensively on eBay, and I live similar to you in Colorado. When I lived in Vancouver, I was right by the mountains, so there was
Mhm.
always somebody looking for snowboarding equipment, right? And yeah, it was
Yeah, and if you have a
a nice
decent
little
price
side
on it.
hustle where even if you're only making 10 or 20 or $30 at a time, that's still 10 or 20 or 30 more than you had at the beginning of the day. So,
Yeah, and
right?
then it's like, was I doing anything? Like, I would've just played a video game or something that time anyways, right? Or watched TV. So, like, I like to do that. One thing haven't been successful at this recently, uh, I think because people stopped doing it, but, like, people are just giving away weights for free, and there's a used sports store in, like, my town, and so I would get these weights, and then I would just go to the used sports store, and, like, I would sell it to them for, like, 40 cents a pound, 30 cents a pound, because I would just get it off my hands really quickly, right?
Yeah.
So I was just selling iron, like, dirt cheap to them, and they're like, "This is great. Like, we can sell this for, like, 80 cents a pound." And I'm like, "Sweet. I literally drove for 5 minutes and then drove here for 10 minutes and made 80 bucks," or whatever.
Yeah. Wow.
Uh,
That's great.
so that's like that and, like, so, like, Facebook Marketplace and those things I think are underrated. I don't do it as much anymore because I found it's now really oversaturated. Uh, but it was a good place to start, and it was kind of fun, and I mean, it helped to max out my Roth IRA this year because I saved a bunch of money from last year, and just so I could max it out. And big thing was like side hustles and getting another job that I liked. I don't recommend people getting a second job that they don't like because
Yeah. No.
the point of like trying to
Find a
retire
side
early and
hustle.
investing is like you still want to enjoy it. Yeah, like don't do a side hustle you hate just because it's money that you can invest. Like sure, it might make you retire early, but if you hate it, it's going to be bad for your health and you're
Yeah.
not going to like life. So what's the point? I think the side hustle culture is sometimes a little too extreme. People think I'm extreme because I work like 70, 80 hours a week, just what I do. Uh, this last month, it's been a little bit less, and I've been liking it a lot more, and so I've been okay with making a little bit less money, but also not working a ton. Like yesterday, I worked like 13 or 14 hours in a row. I was like, I can't do that anymore. Like this is no,
Yeah. Wow.
not for me.
Yeah.
But I think like the hustle culture, especially in America, I think is sometimes a bit extreme. But I think some people need to experience it and then learn how to like tone back from it. Because if you work 10, 12 hours a day, eventually you're going to do something right and figure
Yeah.
out something. And so that's what my mindset was like, well, I can just keep working. I just keep working. And then I figured out, oh, if I do this, I can get a raise and then I don't have to work as much here. I can still invest this money or whatever. Or, oh, look, I can do this thing. Like even with like my spreadsheet thing, about once a week, someone opens up an account and I get a little bit of a affiliate bonus thing, like $5
Nice.
or whatever. And I'm like, oh, cool. Like that's, you get a few of those. That's an hour less week, an hour less work I have to work really, and then I can do something else. So it's those little things that I think add up, and but you have to really grind to find those things for a lot of people, and I was
Yeah.
definitely one of those people.
Nice. Well, good for you. I see we're already well over an hour, so I do want to thank you so much for spending over an hour of your time with me here on the Passive Income Podcast. This has been
No
yet
problem.
another amazing conversation. I've had so many young investors like yourself as guests, and it's eye opening and it's refreshing, and it's great to know that there are so many of you like in your 20s and early 20s, mid 20s, late 20s, whatever, who are just setting themselves up for success later in life. You're putting yourself on a great path. And yeah, just keep up the great work and thank you for thank you for your time.
Yeah, thank you. I enjoy talking about it. I mean, I made the Twitter like my pinned tweet is I made it because I want to talk about investing because my friends hated it, right? So,
Exactly.
yeah, make sure you subscribe to Dividend Dave.
Exactly. Subscribe.